And now on Money News, the Market Wrap. Access the world's financial markets on IG's intuitive trading platform. Search Trade with IG. All trading involves risk. Issued by IG Markets Limited. AFSL 220440.
Now, the story of China's Evergrande is an unfolding story, and it could send shockwaves right around the world, as we've discussed again on this program recently. Well, today, an update on that. China's Evergrande was suspended from trading amid an announcement on a major transaction. Now, unsurprisingly, given this is all unfolding in China, there's a lot of ambiguity about this, these events and what exactly is going on. The market is fearing some kind of grave announcement about the health of the company. IG's Carl Rotter saying the extreme situation, the extreme fear would be that Evergrande is on the verge of collapse. Ultimately, and interestingly, that was all pushed aside today. We had Travel Hopes sending the ASX higher. Hello World was up 15% to $3.10, Flight Centre up 10%, and Qantas at $5.81 was higher by 2%. And that helped the ASX 200 climb 1.3% today. So a very strong start to the week, 7,278, and that was a 93-point gain. Volume was light, though. We had public holidays in parts of Australia. Now, of course, this idea is circulating that the international border actually might be reopening soon. And so not only do you have the travel stocks rising, but the overseas student business, IDP Education, that was a standout, up 9% to $36.61. Gold stocks followed the gold price higher, but there was a slight fall in the iron ore price, which put pressure on that part of the market. CBA's share price 5% stronger, and that helped lift all the banks. Let's chat with Elio D'Amato. He is MD of Spotty. Elio D'Amato, welcome to the show.
Yeah, g'day, Brooke, and thanks very much for that introduction in regards to, make-believe land, whereby, home loans are totally affordable at the moment, and no doubt the ones to Evergrande are the ones of prime quality. Not suggesting ANZ's involved in that, of course, but no, suffice to say that I think if you stick your head out the window, you might get a slightly different temperature.
Well, as I've said on this program before, we don't need regulators to tell us anything. We can look up our street and round the corner and across the suburb and see exactly what's going on with housing. And it's looking pretty crazy out there. Bonkers, I think, is the only word I keep reverting to because I can't think of another word. But yeah, I'm with you. We can see it for what it is, that's for sure. Elio, the move in CBA today, interesting, because that's obviously, one of our biggest stocks. They had a buyback which was $18 billion oversubscribed.
Yeah, $24 billion worth actually was put forward in regards to investors wanting to hand back shares, which normally wouldn't be a great indictment on the company, but this was quite unique, of course, because what they were looking to do was offload some of those juicy franking credits that they've been accumulating in their balance sheet for quite some time. And what they've been able to do through the auspices of the ATO and the various regulators is provide a buyback whereby they've agreed to buy back shares at a much lower capital rate. However, the fine print also says you get a lovely fully franked dividend as well, something like $66, I think it was, which were grossed up for those in retirement phase. The collective was actually more than the price of CBA. So unsurprisingly to see this oversubscribed as it was, yes, obviously they tried to play it fair with regards to those having less than 100 shares receiving an automatic allocation of their full entitlement, although the cynic in me just says they wanted to get the smaller shareholders off the books, but that's a story for another day. But suffice to say, though, it was well accepted. We saw a reduction in the amount of capital on issue, and yeah, given its strength as most likely, I think it's fair to assume, our strongest bank on the exchange, it wasn't surprising to see the price reaction. So whether you sold or whether you continue to hold, everyone was a winner.
Hey, Elio, it's interesting as we talk about the reopening stocks, the travel stocks were booming today, the international education providers. This idea that we're all going to start traveling to Europe and Bali again is really enticing. But kind of at the same time, I found it interesting. You have Nick Scali doubling down on sofas. Now, I thought if we were all traveling, we weren't buying lots of sofas. I thought we were done buying sofas. And it comes out with this acquisition, a bit over $100 million, and the shares absolutely rocketed today.
And the reason why they did that is because they picked up a bargain. It's only around 5 times EBITDA, and look, notwithstanding that they most likely will have to close some of the stores. I mean, the total network now works out to be about 108 stores. Some of those will likely close given the close proximity of where some of them tend to be in those home centres. But nonetheless, though, it was a pretty cheap acquisition. It makes them profitable, or it's a profitable acquisition straight away. And the added benefit was that they're using existing cash reserves and debt to fund the acquisition. So there's no dilution for shareholders. So in effect, it was buying a profitable business at a cheap price, which when you added X plus X equals Y, the Y was actually quite attractive. And it wasn't surprising to see the stock rise as strongly as it did. What may be surprising is to see whether the strength in regards to consumer buying can continue. The company has flagged in the past that they did expect a slight coming off these record levels, but notwithstanding that, they've felt that this was a good strategic fit, synergy benefits there, and like I said, very relatively low risk given that it's adding straight to the bottom line as we speak.
Elio D'Amato, always great to chat to you. Thank you so much.
Oh, thank you very much, Paul.
Thank you, Managing Director of Spotty. That's Elio D'Amato.